Hey everybody, welcome to Trading Caps Exclusive Analysis. In today's video, we're discussing some of the earnings reports. Tesla had a big drop on earnings, and it's still falling in the after hours, closing at 262.90, getting after hours prints of 261.69. So clearly there is still some more selling pressure. And one thing I want to put into your headspace here, and what I'm kind of looking at, is this larger term weekly pattern. You still have this inverse head and shoulders breakout, but you really had no consolidation in this point down at 163 over here, all the way up to this 263 level. So there's about $100 range where there wasn't meaningful consolidation, which means that the technical support is much weaker there. Now, inside larger patterns, larger bullish patterns, which is what this is, you can get pullbacks. Needless to say, one of the reasons we got this pullback is you may have a major pivot, major pivot, major pivot, major pivot. Now, the upside target of this pattern has not been achieved fully. 335 is the extension move off of this pattern, but it doesn't mean that it's going to go up in a straight line. Pullbacks could be bought, but it's very wise to keep tight stop losses in case this starts to turn into a bigger sell-off. Overall, one thing I'm not liking about this particular chart pattern, if we throw on these short-term moving averages, the 20 and the 7 daily moving average, the yellow is the 7, the blue is the 20. We sliced through both of those, and we actually gapped over the short-term 7-day moving average. Whenever I see a straight gap over the short-term 7-day moving average, that is never a bullish sign. That's more of a bearish indicator, and it likely means that this type of sell-off could push us to the lower end of the next support range before we get some sort of a bounce. I'm looking for entries around this 240 and this gap fill around 230 just for a quick potential day tradable bounce. Obviously, it's still risky entering after earnings, but I think one of the reasons why we got such a big sell-off in Tesla is because of Taiwan Semiconductor also reporting earnings gapping down and giving complete horrendous guidance. So let me just erase this chart. Taiwan Semi, first thing I want you to pay attention to is we have this beautiful head and shoulders trigger over here. So you can see this pattern is now in play to the bearish side, and the downside target on this particular pattern, just doing it roughly over here, takes us to about 85 on the chart. So take a look at that. 85 just so happens to coincide with a major gap fill and breakaway gap. So this pattern could now be played bearishly to the downside, and you really just have to use this neckline as a stop loss on your trade. So a lot of bearish patterns starting to kick off with this earnings reports. Just keep in mind that anything can change with bigger mega cap companies coming out and crushing it and slamming it. So the full picture has not been said. We did get some rough economic data, but overall, you look what happened here. The SPY closed down just a little bit, minus 0.66% on the session, really because there's still a lot of strength in the market today. You look at the sectors here on my right screen. You had materials up, communication down, energy up, financial strong, industrial strong, technology. That's the big one that got kicked today. Your mega caps, weak, down 2%. Staples, strong, up 0.86%. Real estate weak. Utilities, healthcare. So you had 1, 2, 3, 4, 5, 6, 7 sectors red and 7 sectors green and 6 sectors red. Now, obviously, the markets fell because the sectors that sold off today, XLY, XLK, really encompasses your big mega cap companies, your top companies over here. This is your top 7 companies, and you can clearly see the divergence the top 7 had from the overall market. Even NVIDIA falling minus 3.3% there. Amazon down quite substantially. Take a look at that. Just as Amazon's about to break down, it gets clobbered. Apple finished down slightly over here. You also have, take a look at Apple's tight wedge. This chart is still technically more bullish than some of the other charts out there, being the fact that it held the short-term 7-day moving. But this wedge is so tight, you would eventually favor a little bit of a breakdown soon. But at this point in time, Apple's still the tech darling. Microsoft had a big sell-off. Google had a big sell-off. Take a look at NVIDIA's chart. NVIDIA also saw a nice sell-off closing below the 7. So notice the pockets of weakness are definitely in the semiconductor space, as well as Meta saw a big sell-off on the session. So interesting price action all the way around. If you look at the QQQ, because the Qs are so heavily weighted in the mega caps, look at that divergence now. You had the Qs down minus 2.13%. I'm just going to remove all those drawings, minus 2.13%, and this was heavy volume, 68.21 million shares. So you have to take note But the last time we saw a sell-off of that nature with this type of volume, we ended up having this little pullback in the markets from this high pivot around 373 down about 4% in roughly 10 trading sessions. And that was a pullback right to the 7-day or the 20-day moving average. So could we see some sort of event like that? I think that people will be buying the dip here, but just be careful that it could pierce that 20-day moving average with some pretty fierce overbought and conditions that need to be worked off in some variety. And if some earnings come in bad and the reactions are bad, then you have to expect that levels and technical levels could be clubbed deep. But if some earnings are better and explode higher, then you would favor a continuation rally in some individual names. At this point in time, you just really got to wait for those reactions. Let's take a look at what else happened today. You had commodities very, very strong. Natural gas basically breaking out today on the daily chart. Look at this beautiful wedge pattern breakout. My apologies. My screen just connected. But a beautiful, beautiful wedge pattern breakout on natural gas has occurred in the charts here. And basically, I would love to see a secondary close above this daily high over here. But nonetheless, this is looking very, very primed and beautiful to move higher. And if you simply do a fib extension off of this nice bull flag pattern, so take a look at this pattern. This is a beautiful flag here, and then you've had your flag pattern, consolidation, lowering volume. Let's just do a simple measured fib move of that pattern. Look at that. Upside target takes you to about 325 on the chart, and that was where you had a big, big reversal candle, a failed breakout there on a heavy volume area. So natural gas is certainly looking poised to move higher. Obviously, we are long some individual stocks like AR, which are set to move higher. From my opinion and point of view, you've been putting in this nice basing formation, and you just got a bullish daily close on the chart right above all of these wicks. So you've really been struggling across this high pivot zone over here multiple times. And we finally just got a beautiful daily close above that area, which signifies a technical breakout on the AR charts. And you always want to see the underlying stocks that have exposure in the energy sector and natural gas sector to be trying to break out as well. You had some of the big mega caps, XOM, acting well. And let's take a look at the WTI crude chart. So WTI crude also looking very, very well, consolidating above this bearish range, which it broke out, retest, and now it's just putting in a little bit of a sideways flag pattern. I would like to see a little bit more consolidation, and then I think this could be bought for a move all the way up to at least $80, $81 on the chart, and maybe even test this high up here if we get an exuberant rally. And what does that mean? What is that going to mean for the inflation fight? If oil starts breaking out, if natural gas starts breaking out, and you start looking at the CPI components that have decreased the energy side, what is that going to mean for inflation? I mean, when you look at that, I think it's quite clear if you look at the yield market, the 2-year yield is just remaining exceptionally strong. It has a dip, and then it just keeps rebounding and wanting to chug along higher. So if you get a daily close above this wide range red bar, which the high sits at 4.88, you're going to be testing the all-time highs again and likely breaking out. This was a failed breakout here. Basically, you made a new nominal all-time, or not all-time, new nominal cycle high in the yields, and then it got pushed back down and failed. Now, if you get a close above this 4.88, you're going to be testing the highs, and this likely could be a confirmed breakout on the yield market. And that certainly would put pressure on banks. That certainly would put pressure on a variety of other assets. You look at the Dixie. The Dixie had a strong day today, getting stuck under resistance right now. I have a simple trend line. One of the reasons why it stopped there is if you can look on the weekly chart here, this 180 is a big, big level. It's where you had a failed breakdown over here, where you had a failed breakout over here, where you had a breakout, a retest. You're right under that level now. So the dollar, if it can get a daily close above that, then you're likely going to retest this upper 102.50 area. That's kind of your breakdown of this head and shoulders that has played out and occurred. So typically you do get a retest of that. And if you get a close above that, then that means it could be a bullish reversal for the dollar, which would also signify yields. If we look at gold, the counterparty, gold is just not really believing any type of reversal. It's still holding its sideways pattern, but if the dollar breaks out and goes higher, you likely will see gold. But right now, gold's looking okay. But the big question is this going to be a lower high in the chart, or are we going to test this pivot and get above there? It's yet to be seen, but right now there's still positive price action in the gold. You always want to see the miners participating and leading the forecast of gold. Right now, what I'm not liking in the miners is that you do have a potential of a much larger M-top or head and shoulders pattern that could play out. It hasn't triggered yet, but it's on the cusp of doing so. And if GDX continues to diverge from the actual gold, it could mean that the dollar is likely going to go higher, and the miners and more speculative money is going to sniff that out. Let's take a look at, let's see what else transpired in the market today. I'm just scrolling through. That's going to sum it up for today's report. Basically, in terms of earnings today and tomorrow, so after the bell, we have ISRG, CSX, Capital One. So let's just look at Capital One, which they have fallen slightly in the after hours. So they closed at 114 down to 113.33. Let's look at ISRG in the after hours. ISRG gapping down. So that's going to hurt that medtech healthcare. Take a look at this sell off. That's a pretty big dump on ISRG. Needless to say, down about 7% or so in the after hours. So big move down on ISRG. Just scrolling through to see if there's anything else that is worth mentioning. Take a look at CSX. So CSX also dumping. So it seems that, I guess, the earnings that reports that are coming out are really not hitting Wall Street's expectations. You know, stocks have run up so much and they've put huge expectations on these companies' earnings, and it's very few of them are starting to actually play out and hit. So we've had a lot of negative price action so far in a variety of names. Another head and shoulders triggered there. Let's look at what's going on tomorrow, because it's Friday. We have American Express, Schlumberger, ROPRF Financials, Huntington Bank, more financials, Auto Nation. They're good to know, a barometer of the economy. And really, that's it for earnings. But in terms of the investing side, the economic data side, so let me just pull up my data. So in terms of data tomorrow, we have core retail sales in Canada and manufacturing sales. And then really that sums it up until the end of the day. We have the CFT positioning and probably some balance sheet data from the Fed. But that's probably it for this week. So tomorrow's going to be a big day. You know, the market sold off pretty much into the close with a little bit of a minor bounce late in the session. And the big thing is do we get an early buy the dip tomorrow for a quick day tradable bounce, or and then a sell-off, or do we just get more selling and then a late day Friday bounce? My expectations for tomorrow is probably a little bit of a buy the dip bounce in some names, but that's all providing that American Express, Schlumberger, a couple big, 131 billion market cap on American Express doesn't really hurt the market too much. But on that note, please give this video a big like down below. Stay tuned for more. Definitely keep dry powder for these opportunities and earnings, because we have a whole bunch of mega cap names that are still set to report over the coming weeks. And it's going to be really intriguing to see how, banks continue to fare against higher rates. And right now you have bullish patterns breaking out on the banks, but these patterns could always fail if the rates sneak up and surprise people. On that note, thank you all for tuning in. We'll see you on the charts a bit later.